Welcome to today's episode brought to you by Total Processing. We are joined by the highly influential man that is Dom McGregor. Dom is the co-founder and former COO of Social Chain Group, which he co-founded in 2014 alongside Stephen Bartlett. They grew the business to over 500 staff before publicly listing the company on the Dusseldorf Stock Exchange in 2019 with a valuation of over £250 million. Dominic was then hired by the government as an advisor to the Cabinet Office on their use of social media, and most recently he has co-founded a multi-million-pound fund called Fearless Adventures to help grow the next generation of direct-to-consumer brands in the UK. All of this before he's even turned 30. Welcome, Dominic.
Can you write my bio for me, Harry? That's a better bio than I've written about myself before. So I'll take that afterwards.
No, well, thanks very much for coming on, Dom. We really appreciate it. So let's go back to the beginning. Social Chain, what a story. Yourself and Stephen created an absolute monster of a company. Could you tell us how that came to be?
Yeah, I mean, funny thing is, sitting here, Harry knows the story pretty well because he's told it a lot of times. So correct me if I'm saying anything wrong. Just jump in and say, yeah, Social Chain actually started by accident. It was one of those things where we didn't realise we were running a business and had something that was quite valuable. So ultimately, when I was at university, I went out one night, got ridiculously drunk, and decided to tweet in the morning that I'd run out of toilet paper. Because the whole world needed to know that I'd run out of toilet paper, I thought that was a really useful piece of information which people needed to know. So instead of doing the normal thing and going downstairs to the shop and buying toilet paper, I thought, you know what, let's tell the world that I've run out of toilet paper. It became this kind of documentation of my life. So Student Problems was basically me at university, going around, realising how expensive cheese is, realising that you spend your entire time drunk and that lectures were pointless. And I was just documenting my life at university. And it got to the point where I had 50,000 followers at my fingertips. I was like, this is pretty cool, you know, this is cool. And I'm sat there in lectures, like not even focusing on anything, just tweeting about university. And that's when Steve got in touch with me. So I put an email address in my bio for the first time, and I got two emails, one from a guy from Birmingham, the other from Steve. And for some reason, I decided to reply to one from Steve. So I called him, we had a chat. He said, look, that's me. I think you've got a way of making some money, which for a student is the dream. You know, I'm like, yeah, of course. If I can make money, that's going to be fantastic. So we met in a bar in York and decided to discuss what each of us was doing. For me, it was like, I'm running this Twitter account, but for Steve, he was running this business called Wallpark, which is basically like Gumtree for students. And he was trying to find a way to reach young people and students online. And he was trying everything. So he was going down Oxford Road in Manchester, handing out leaflets. He just wanted to hire a bike to on the back have a big billboard and write that down. All these kind of traditional guerrilla stunts, which were kind of growing at the time, but social media was still in its infancy, that people didn't really think of that as a place to go to. And he actually looked at the platform and he tried to run his own accounts with the team there, and they didn't make it work. So came together and said, look, let's grow more social media accounts and see how this impacts Wallpark. And we did one post on Student Problems, and we got 300 people to the website like that. Wow. And that was like revolutionary. He was like, we press one button here and then people come and it's free. Yeah. For us, that was like incredible. So we decided to build more pages to send more people to the website. We decided to then launch articles around student life. And we got to the point where we're getting 1 million people to the website every single month. Wow. And this was like for free. So we were like, oh, this is cool, this is working. And then what we realized though is that people weren't sticking on the website. So like the idea of Wallpark and the community and building like a notice board wasn't right. Mm-hmm. And we were a bit in limbo then because that wasn't working. We didn't know what we were going to do. We had these social media pages, but we didn't really know what the value was. So we then left Wallpark and kept the social media pages and just decided to go traveling for a bit. So we went traveling, and I remember it quite well. You know, we dropped out of university. We don't get any pay now, so we have to make money somehow. We have to fund what we're doing. So that's when we started to create the idea of what we were going to do is sell packages on these social media pages. So we had to brainstorm quickly what an idea for a name was. and we decided, it's a chain of social media pages, so let's call it Social Chain.
Nice.
That's literally the logic behind the idea.
And where did the name get formed? Which country you were in then?
So we were in Manchester.
Oh, nice.
We were in Black Dog Ballroom off Oxford Road.
Nice.
3 of us around probably a table like this, me, Ash, and Steve. And there's a debate about who came up with the name. I can't remember. I can't remember. I'm not going to say who I think came up with the name, but there's a debate of who came up with the name. But the idea is that it's a chain of social media pages.
Nice.
So we ended up creating packages, I think gold, silver, bronze, and sent them out to, we all had to find 100 email addresses for people in the student space, and we had to send an email each to 100 people about the social chain.
Nice.
And why they should work with the social chain. And that was kind of our first kind of creation of the social chain business and trying to sell these packages. And I think we sold 2 gold and 1 silver package.
Amazing.
And that was the funding for us to go traveling.
Wow. And who was the first client?
So one of the first clients was Pretty Little Thing.
Oh, wow.
Yeah, so Umar and they worked with the social chain very early. There was a couple of people. Hello You was a very early client. They were doing like university boxes, but they wanted us to help write their articles and things like that. And then we actually got a really early campaign with Spotify for their student discount and Microsoft. So the kind of first, some of the clients there are £1 billion businesses in day one.
Wow.
So we were very fortunate that because we had such a niche in the student space, and we knew big brands were trying to get into it, and we had such a solution for it that we managed to get good clients from day one.
Amazing. So you started generating business and bringing on some clients. When did you decide to really form the business and say, this is going to be a real thing? Let's get some office space. Let's properly make this into a business.
Yeah, that was kind of the moral dilemma. I think looking back at Warpark and it being a bit of a, not the success we were all wanting it to be, there was a bit of time where we needed to decompress and we needed to live a little bit. Mm-hmm. We were kind of doing this thing where we're going against the grain a little bit. All our friends were at university, and we probably had a lot less money than they did at that time. It was not a case of anything being successful, but we had something which we thought was quite valuable. So we decided to, as I said there, to go traveling for a little bit and see if we could do the whole working remote before it's cool kind of thing. Yeah. So we went traveling. We went to Thailand, spent a bit of time there, came back from that, and again, we're still trying to find our feet in terms of what the business actually was. And then a couple of kind of things happened next, which gave us the momentum, I think, and the confidence that what we had was valuable, because we went from like posting articles and links to doing something different, which was the Tippy Tap game. And this was also was a big player. And looking back, there was a big movement towards apps then. I think there was an app for everything. I think everyone was launching apps at that time. So for us to be able to find an app, own part of it, do the marketing for it, and generate over 2 million downloads was like, wow. And it's like that case study we lived off for a very long time. Yeah, amazing. I think it was still in the deck when you were there. Yeah. So that for us was like, this is powerful. We can actually make 2 million people act to do something, to download an app. So thankfully that gave us a bit more financial freedom, but it also gave us the confidence in the case study to go out there and do more. So we packaged that up and we started speaking to more people in the app space about the Thunderclap, which we kind of created as our kind of idea of all pages talking about things at once. So we were able to then, again, continue the travels. So we went to Brazil, we went to San Francisco, went to New York, and the whole time we were consulting with brands based in London, based in San Francisco. We spent some time in Silicon Valley with Monkey Inferno and Bebo, working with those guys, and on products like Blab, which then later got acquired by Twitch. So we were in the room really early on, advising on those kind of things and just giving our opinions on it. It was crazy, some amazing people there. And then we were thankfully we had the case studies and the confidence to be able to tell people how they should be working on their apps and their products. And while the investment into apps was increasing, obviously then the requirement for marketing in apps was increasing as well. So we managed to work with a number of fast-growing tech app companies in London, which with that case study of being able to get 2 million downloads, a lot of people listen to you. Yeah. So that was kind of the period of time when we kind of felt we actually had something. The Thunderclap became our kind of product. Nice. We started to work with influencers to be able to launch apps as well to kind of make the Thunderclap more. So, for example, we'd talk on all our communities on Twitter, but if we could get Frankie Koza to talk about it too as well, it would just be much bigger.
Yeah.
So we started to speak to influencers before influencer marketing was a thing, and YouTubers to be able to help us. And it was then when one of the clients we were working with turned around and said, "Do you want investment?"
Mm-hmm.
And that's kind of the line in the sand from when we were these kids traveling around on our sun loungers, holidays, doing bits and bobs, having fun, to, okay, now we've got a decision to make. Do we take investment and lose the life? And that's how we saw it at the time. We did see it that black and white, is that we'd lose a lifestyle.
Yeah.
We'd lose the being able to be in another country. We saw investors, because we were young, we saw investors as a commitment.
Yeah.
And I think any commitment at 21, how old is 20, is difficult.
Yeah.
But a big financial commitment and a lifestyle change to ultimately start working with someone, trying to generate returns from what we were doing was such a contrast.
And you'd already had experience and exposure with Wallpark as well, from an investment perspective as well.
Yeah, I wasn't close to it. It's obviously Steve was. I kind of came in, it was Steve's baby. So the relationship with the investments there was, we were familiar. I was getting more familiar and comfortable with it. And for me, it was a case of, we've got something now, we think it's valuable. The logical thing in my head from watching like The Social Network was to get investment. Yeah. That's all I knew. That's the world I knew about. So it was like, okay, we've got investors, and it's the idea of someone investing in you at 20 is like, wow, that's crazy. That's cool. Yeah. So there's a little bit of excitement of like, someone actually wants to invest in me. It's like, wow, that's really awesome. Let me think about that for a bit and then come back to you. And I'm like, wow. And how did you value your business at that time? How did you come up with the sum that you were looking for and willing to give away? So this is probably where a little bit of naivety comes into it, is that being so young, the number of the amount of money was more exciting than the equity. We didn't think too much about protecting ourselves in that sense. It was like, okay, we probably need this amount of money to go. So we were like, okay, whatever we need to do. And we did negotiate, and we probably were a bit naive in that sense to be able to say, no, actually, we think the value could be this. And we didn't do any financial forecasts or any modelling. It was just a kind of two kids with laptops who might have an idea. We didn't really think of it anything more than that. So we were grateful to get the money, but also the office space from them and support. And they were a client of ours as well. So the whole kind of value they brought wasn't just based on the cash for equity. Yeah. There was more around it. So we definitely looked at it not as a kind of straight valuation of the company. It was more like, what are they bringing to the table, and is that justifiable enough for them to help us grow? Yeah. And how many years were they involved with the business before you went and looked for other investment for the business? So in some instances they were the dream investors, in some instances they were the worst investors. So they were the dream investors because they left us alone and they just let us go on with product and do what we're doing. They were the worst investors because they left us alone. Yeah. So it's this paradox between, for some people that would have been perfect because they know what they're doing, but I think for us, I remember they put us in touch with so one of the investors was a guy called Guy, but he was an accountant, and he put us in touch with an accountancy firm that we used, and like it transpired that they didn't do anything for 6 months. Oh. They were supposed to have bookkeeping, they were supposed to do everything, and like it was one of those things you neglect. You don't think when you first raise an investment we need to have our numbers in place. So when we came to do a tender, we need to supply management information. What's management accounts? And then we had to get on the phone to this company, which is a renowned law firm, like not a law firm, a loan accounting firm, and be like, where are our books? How's Jane got on with them? And Jane became the bane of our lives because Jane hadn't done it. Oh. So we had to then spend 6 months, probably another 3 months actually, getting the 6 months accounts up to date. Yeah. And like, what's these transactions? What's the business model? How does it work? So like, oh my God. So they put us in touch with some people. Like we used their lawyer for a number of years. Mm-hmm. He's still a personal friend of mine. They put us in touch with an accountant. It didn't really help. Didn't really do anything. So leaving us alone just to get on with our devices in some areas was good because we could grow in ourselves, but we probably needed a bit more support in terms of that kind of stuff to professionalize us a little bit. So we never looked for investment ever. So Social Chain, we never went out to market. We never ran a process. We never were looking for it. again, maybe we should have done that. Maybe we shouldn't. I don't really know what the right answer is there. But I think in hindsight, I'm happy with how it worked out. But it's one of those things you think, what if we ran a formal process? What would have happened? But you can't think like that. So the investors were in the company for about 9 months before we kind of got more interest from people. And we got an email from George, who's our later investor and chairman, asking if we wanted to come over to Berlin to meet him. And Steve's logic was, I can't remember where I was, but I think I was out of the country or something. But Steve's logic was, I've never been to Berlin, so I want to go to Berlin. So he went to Berlin and met him, and then George kind of sold us a little bit on his vision of what he wanted to do and what he was doing in Germany, and we kind of saw synergies there.
Yeah.
So what we wanted to do with our existing shareholders was bring George onto the table, to help to be involved in the business, to help us grow, and he's done two IPOs previously, so we thought he was a really good person to have around. And then basically in the kind of next couple of months, we got very close with George, and the decision was made to buy out the other investors. So it was just us and the kind of George and the team over there. Yeah,
brilliant. And what business at the time was George involved with? Was that Lumaland then?
No, so George was running a business called MVC, which was New Video Commerce. That's what it stands for. And his basically his background with television and teleshopping, he saw how powerful that was. He looked at YouTube as the future vehicle for putting products on and selling them. And it was, to give him good credit, is very visionary. I think this was before influencer marketing, but YouTubers were going to be the people who were going to be selling products in the future. So he in Germany had built an influencer management company before influencers were influencers. I guess this is very early days, where he'd signed some of the biggest YouTube talent, and they were working with brands, and they were doing their own product launches. So we were kind of inspired by that idea of combining products from digital and social. We obviously had the media network, and they had tried to launch NBC in the UK, and I think they had subpar talent, I think, is probably the kind of place. So they looked at an acquisition strategy of finding someone in the UK who they could work with, who could help supplement that reach, I guess, ultimately. And we had the reach, we had the numbers and the figures. So he was doing that, and obviously he'd been involved in other businesses before, but he was in a kind of period of limbo at the moment where he had a couple of investments that he was, industrial investments, other things, but was looking for the next thing to do, and he kind of saw the vision with MBC of making that something.
Brilliant. And how did that change the business from what it was then to...
Well, we had a management accounts then. No, I think looking back at it, the kind of story was first time around we got a check, and it was a case of probably leaving us a little bit alone to figure out whether this investment was going to be worth it. We did some good stuff with that. We grew. I remember the day when the investment hit the bank, and it was a fantastic feeling. It was like, I think it was November the 3rd. I actually tell you that I know the date. I remember checking the bank, being like, oh my god, the investment's in. That's cool. We can do all these things now. And that kind of first 6 months was really, really, really tough because it coincided. I think the two things came in parallel, coinciding with me personally having difficulties, and the business kind of growing and scaling. At a kind of point, we had a plan with that money to go out and scale quickly. So we brought a lot of people in very, very quickly. We heavily marketed ourselves. I think that was the first year in the March, we spoke at YMS, which is a massive conference, which, as Harry knows, we always did really well at from getting people in. And that was in the March. So we were starting to overspill with work and with situations. And one of the great things about an agency is that when you work with big clients, they pay you in 120 days, but you've got to pay the work straight away. Yeah. So actually what happens is when you sell 2 million worth of business and you've got, say, hypothetically 50% of margin, by the end of month one, you've got to come up with £1 million to pay suppliers, but you don't get paid for another 2 months. So you've got this lag as you grow of like constantly chasing your tail of like, okay, we're profitable, we're doing well, but we haven't got the cash to carry on. We need to get more money in, and we need to make sure people are paying on time. So we have all these growth pains going on, and for me personally, that becomes the difficulty of trying to manage all this kind of stuff. And I kind of implode personally, and I go into drink and downward spiral and all that kind of stuff. And I think what we needed at that point was more support. Yeah, it was we as founders we were completely focused on building the plane as it was flying, but we needed probably more support around getting financial processes and structures in place. Our first financial hire came in April that year.
And what year was that? 2000 and... 16, was it?
When did I stop drinking? 2016.
Yeah.
2016, yeah. So, there's a correlation between having more people in the financial department and me stopping drinking. Like, it's black and white. It's as simple as that. Jess came in, who was fantastic, and she helped us understand what's going on in the business. We started to get more data, more information, what was working, what was not working. And for me, I'm very, the way I kind of work is I'm very much, I want to understand why things are the way they are. That's the same in the world, in the life, and with people.
Yeah.
So like having this kind of like black spot in the business where I don't know what's working, it kind of drove me insane. It kind of drove me down to where I was. So getting the financial information in place, getting the structures and processes in place allowed us to make better decisions, which I was kind of, we were all craving for, but I was kind of really suffering on because it was kind of in my remit to make these decisions on a day-to-day basis. So that for us was probably what we needed. If they said to us in that November they're going to put the money in the bank account and they're going to really support us as well and bring in an FD and all this kind of stuff, it would have been a much better situation. However, at the time there was a little bit of a I guess maybe catch-22 is that do we trust these people as well?
Yeah.
We don't know that. We don't really know them yet. They're investing in us. Do we want them too close to what's going on? And then maybe it was a bit of naivety from us, is that we didn't want to tell them everything that was wrong with the business.
Yeah.
Because there is problems with every single business. Every single time someone invests, you get the best of them. In the sales process, you get the big picture, you get the idea, you get the great stuff. The minute you write the check, you realize the problems.
Yeah.
So no business is perfect. No, when it comes to investment, everyone's putting on their best face. It's like dating a little bit.
Yeah.
If I'm going to sit there on a date, I'm going to meet you a couple of times, I'm going to give you the best about me, and then you actually meet someone, you're like, oh my God.
Yeah.
So we definitely dated. We definitely put the best on. And what I see now is the same with a lot of businesses, is that they put a front on, they put a great story on, but as being in that situation as an entrepreneur, the crap that's happening. Yeah. You need money to be able to fulfill what you're doing, but there's a big gap between where you are now and where you're going to get to, and that obviously that funding's that middle bit. Yeah. But the funding's one part of it. It's the support as well, and I think we had a bit of a really great period in the business where things were going fantastically well from a growth perspective, but things were going miserably well from like a personal perspective because of all those problems I spoke about. And you then get in a cycle where the success actually is damaging because you sit there, you win a contract. I remember us winning, like, I think it was Amazon. I think it was, do you remember the Bundesliga campaign? I do, yeah. I remember us winning that, and it was like one of the biggest campaigns we're doing, and Huawei as well. Yeah. I'm like, oh my God, I said, for like Huawei, their agency, not them, so that's to give them some respect, took 12 months to pay. Yeah, I remember. You remember that? I remember the stress. Yeah. You remember the stress? Yeah. They're trying to get money out of China. I know. That was our biggest campaign, and we had to wait 12 months for them to pay. And then Bundesliga as well. It was Amazon Germany, so I was like, international campaign again, okay. And then you can't accelerate those moments because you're just thinking of every single possible route of what's going to go wrong. Yeah. And you're like, okay, from a cash flow perspective, you're like, oh, for God's sake. Because
at that time you had over 100 staff. And you've got to think about payroll. So that I suppose that leads into the next question. Was that when you looked for more support from an investment perspective to just try and ease those cash flow issues? Or
this is kind of when we started to think more about the options for the business. Yeah. We're in such a position where the agency model isn't nice to generate cash, as we kind of explained earlier, and we knew George was always going to back us. Yeah. So he always was there supporting us. But it was getting the balance between like making sure we've got the cash for investment versus the kind of just operational cash flow. And that too was like the dilemma we were trying to get to is like, we were doing great numbers, we were doing profitable, but we needed to ring fence money for the US, for example. Yeah. So then, we knew there needed to be a significant investment into the US business to get it to where it needed to get to, but that couldn't come out of working capital, because the working capital was just keeping us going along. Yeah. So we needed to make sure that we had additional investment to go and do these things, rather than, for example, if trying to fund the US out of working capital would have been disaster. It'd have been an absolute disaster. It just wouldn't have worked. So what we then started to do is look for and speak with George around additional investment for specific opportunities, be that an acquisition or be that a expansion. So we kind of started to look at the long-term vision then as well, and be like, where are we going to go with this company? What's the exit route? And that's kind of when we kind of came on this, with George's experience of like, hey, the possibility here is for us to IPO this business. That's the route we're going to go to. And if we get to this place with the business, we can then look at an IPO. So we kind of knew where the North Star was, and I think that was one thing which really helped, is that we had an end goal we were working towards. Be it again, it's a strange thing to think about at 23 years old, is that we're going to exit this business one day, because it's all you know. Doing something from 19 years old, you don't understand. You never have another job. You never, this is all you know. It's like, I'm going to leave this one day. No, it's my baby. I'm going to be here forever. But you start to realize that those realization moments is a part of the process. It helped us having that line in the sand to be able to work towards, to be able to inspire the team, to be able to look at kind of what the targets were ultimately, and what the plan was. So it helped with us be like, okay, so if we're going to reach this objective, we need to go do this in the US, we need to do this in Germany, we need to do this in the UK, look at these acquisition opportunities, expand in these regions, and go from there. So it helped us then, with the entire Social Chain group, with the German business as well, look at what funding we needed as a business to be able to go and achieve those. And as we kind of all became much closer together with George and the team there, it became one people pulling in the same direction. Previously, with other investors around the table and George around the table, and people pulling in different directions. We want to go this way, we want to go that way. But I think when we had that kind of alignment, when everyone knew what we were working towards, with the kind of realization of the North Star and the IPO moment, we all kind of sat in a room and went, that's okay, we all want this. Let's work towards that then. And that alignment was the first time we could then start to strategize on what we want to do from the business and what the success looks like. And that's when we started to get into much better annual planning. It's since like started to do a 2-year plan. I'm like, this is where we want to get to in 2 years. This is where we need to be in 2 years, really. And then we wrote backwards. Okay, how do we get there? Who do we need to bring in to achieve that? What does the US need to look like? What does Germany? What does UK need to look like? So that was, for me, it was a real focus point. It was like, this is a focus point to focus on now. We can achieve what we want to achieve, and this is how we're going to do it. So let's work towards it.
And how many years before you IPO'd were you actually talking about IPOing?
I think it was something which was on the cards for probably from late 2016.
Wow. So 3 years before.
So they invested late 2015. Then they brought in a financial team, and that kind of compressed it. And then end of 2016, it was kind of like, we started to come closer together. We started to have Christian started to get involved from a CFO perspective. We started to see that, and we knew that being the first kind of person in the social media, social commerce space to go and be a PLC was an opportunity for us to go and woo investors a little bit. With something that we knew more than them, I guess. We were an authority in social media, and we could talk very credibly about how we utilize it for clients, for ourselves, for our products. So we knew that we could sell it to other investors. And I think given us that the ability to be a publicly traded company and be able to bring external capital in to be able to fulfill our aims was the right decision. So I think we were very focused on the North Star, but that really helped because it's what we were working towards from 2016, and it really then made even more sense when we started to understand the more about the capital market world, and more about the investment world, what they're looking for. They're backing management teams. They're looking for things that are innovative, and anything that they were looking for, we ticked the box.
Yeah, and that day came. You IPO. How do you feel after? What's the feeling?
This story is very well documented. So I think if you wanna read it, Steve tells it in a very good way. But you feel nothing. Honestly, I remember waking up and didn't feel any different.
New day,
and it was that was a really kind of like just significant moment, because, as I said, look, it's been the North Star since 2016, and then you get to the point and it's not a fantastic achievement. It's not a celebration. You have those things that happen anyway, but in yourself you don't feel any different. No. And you can have as much external stimulus as you can have lovely dinners, you can have lovely people telling nice things to you, you can have all the PR, the gratification on social media, the likes, the comments, the messages from people, but like it didn't change anything inside of me. So I don't know. I've struggled to think about it in terms of putting words to it, but it just didn't bother me in a sense that
didn't change you.
Didn't change me. Didn't want me to become any different. And for me, it was just another day.
Yeah. So obviously you've exited the business now. So talk to us from IPOing all the way through to exit. You know, what sort of changed within the business from the IPO perspective, all the way to obviously deciding that, you know, now or then was the right time to leave.
Yeah, I think as everyone knows, we were so closely linked to the business. You know, it's our baby. We've been doing it for so long. We were so, you know, I was Dom from Social Chain. That was how I was for a number of years. And again, when I sit back and think about what I started to evolve over time and how I started to see Social Chain in my life, I really felt that this business was my university. It was my education process. It was my 20s. That's really how I viewed it. I wanted to do it for a great period of time, get it to a point where I've learned as much as I can, and then when the time is right, and move on. And I think it's very difficult for people from an outside perspective to appreciate that, because they saw it as like our identity, and we lived and breathed it, and we loved it. But I mean, I remember thinking, like, someone said to me, like, what are you going to do when Twitter changes? Like, oh, don't you worry, we'll be on top of it. And then TikTok came around. I was like, oh my God, I'm going to have to learn another platform. And I think in the back of my mind, oh my God, TikTok. Ugh. We moved so quick into TikTok. I knew so much about TikTok, but I was like, there's no way I'm going to use this product.
Yeah.
It's not for me. I feel like I never wanted to be running a social media company into my 30s. It's a young person's game. It really is. Our creative team was so young. They were so engaged on trends and things like that. You know, I felt at the time
you were losing touch, maybe.
Not I was losing.
But of the social space, of some of the new platforms,
the passion, the love, the kind of real ambition for the product was kind of, you know, it's very, very common, the toxicity that social media is causing. We lived and breathed it every single day. You know, does it have an impact? Did it have an impact on my well-being? Probably did.
Yeah.
You know, I had to sit there every single day looking at social media. I still do that now, to be honest. But no, I mean, it really did feel, for a number of reasons, just that it was completely right in myself to move on to the next step. And looking back at what we'd done with Social Chain and where we've taken it to, it was someone else's responsibility to take it to the next place. Yeah. You know, I was a young 19-year-old guy when I started it, and saying at 27, this is where you're going to be, I'd bite your hand off and laugh. Mm-hmm. And to be able to go for that experience, to be able to learn as much there, and then to be able to hand the keys over to somebody else and know that the business is only going to go from strength to strength, it's fantastic.
Amazing, yeah.
And that was, you know, the thing for me is that to be able to leave, to be able to have a great team in place, and to be able to say, I fundamentally know the business is going to continue to thrive.
Yep.
Is what you want and why you start things. So that was the kind of reason. And you learn so much about the process. You learn so much about yourself. You learn so much about things you enjoy and the things you're passionate about. That you can make these decisions.
Yeah. And who brought that conversation forward? Obviously, earlier in the year you decided to leave. Was that Steve coming to you? Was it you coming to Steve? Was it a joint conversation? How did that take place?
I think for all these things, the world, people, you know, we're also linked to what's going on from the business, and the feelings are very reciprocal. I couldn't tell you who said the first thing, but it was just this kind of sense that we've done it, you know, and we were very, very happy, and we were very fulfilled with what we've achieved. So it's hard to really pinpoint and be like,
that was the exact
moment. This is that moment where all this happened and this led to that. It never was like that. It was just a gradual kind of sense that we're ready.
And that was the time.
Yeah.
And from then you decided to take a little bit of a break, but also work with the government, mm-hmm. and do some sort of exciting work from their social media.
Just checking if they bugged the room.
Yeah. And are you still involved in that?
Yep. Yeah. this is probably one bit of advice for people is like, sometimes having no plan is not a good plan.
Yeah.
So I kind of, with Social Chain, there was never a what's next. And people always ask me, are you going to do something next? I went, well, no, I haven't got a plan, because the entire life of Social Chain was dedicated to Social Chain. Maybe I neglected networking, maybe I neglected other things. And I can really think, I was just writing a blog this morning that I'm going to publish. But like, I really struggled to network with other entrepreneurs and like-minded people, because being an agency, you're always trying to think, oh, what can I sell them? Mm-hmm. So you have this kind of skew towards people, like meeting people and being like, oh, what can I get from them? Which was very difficult for me, because like I didn't then feel like I was building like general relationships with people. Yeah. I feel like, people in Social Chain, that the team that I spent time with the team, they weren't necessarily always my friends, and relationships then change as soon as you leave Social Chain. Some people will never spoke to me again. Mm-hmm. Some people were and now I'm close to them because there was genuine friendships there. So that was very shocking. Your WhatsApp goes mental, and you realize, God, these people actually it's a professional relationship. Yeah. And when you invest so much in Social Chain, and our entire life was it, you know what the culture is like. Yeah. A lot of these people think, well, you assume they were your friends. Yeah. And you realize it was just professional for them. It's like, oh, that's a bit annoying. Mm. So that was a learning curve, and then so a sense of like having nothing to go to, you kind of just wander a little bit. You kind of think, oh well, what do I want to do? And I had a couple of friends in Number 10 who kind of said on the back of the news, going like, "What are you doing next?" I went, "I don't know. What am I doing next? I'm taking some time out at the moment. I'm just going to enjoy some time with the dog and within life. So I don't know what I'm going to do next." And I felt a sense of obligation, given the fact that we all were glued to our TVs with COVID, watching the government trying to make things work. Maybe there's a sense of obligation to be able to be like, okay, I want to have a go at helping. Mm-hmm. So for me, decided to roll the sleeves up a little bit and get into the government and public life of helping public bodies. Nice. So it's been really enjoyable. It's been really interesting to see a little bit under the hood of what happens and understand what they do really well and things they can get better at. And the only thing I can do is speak from my experience of what I've seen and what I know, and how I can recommend things. There's some fantastic, civil servants. Some of them are fantastic. Some of the fantastic people you ever meet, in terms of the way they operate. Incredible people. But there's some naiveties there, which sometimes you need to be able to say, well, that's not right, and you can do it this way, and being able to bring that information into the government, which is, at the end of the day, spending taxpayer money, making sure that needs to be best utilised, making sure you get the best, as everyone says, bang for your buck, because it's not your money. It's all it is, everyone's money. 100%, yeah. So, that for me has been something which I've really enjoyed. It's been very challenging. It's a very new world. Someone said to me, you're either going to love it or hate it. It's very Marmite. Yeah. And for me, it's been a great challenge. I think at times I would love to have, because of being in the advisor role, there's loads of technicalities. So like you can't tell people what to do. I'm not in the authority to tell you as a civil servant what to do. I can only advise. Okay. So there's sometimes when you want to grab naturally you want to grab the ball by the horn and just go with it and run it yourself. Yeah. But that's not what you can do. So that kind of structured advisor role has kind of been a blessing and a curse a little bit, because there's sometimes where I'm like, oh, I just want to do this and do it myself and show you, but then you got to just understand there's a machine that makes these things happen, so you just throw things into the machine and hope you can shape them out the right way. Yeah, amazing experience though. I mean, I've been to 10 Downing Street 3 or 4 times. I've met people in the cabinet. I've met special advisors. It's been a little bit like surreal. Yeah, it's been a little bit surreal. Yeah, brilliant. And then that leads us into your next venture then. So Fearless Adventures. Talk us through that. Why have you gone into the investment space? Mm-hmm. Why do you feel that this is the next thing for Dominic McGregor? I think it's a very kind of easy answer, I guess, is coming out of the back of Social Chain. You reflect and review and look at things. A number of things that I look back on and think, oh, that would have been really cool if we did that. Oh, that was really awesome. And there was a couple of businesses which came in who never had any money really in the early stage, and we're trying to figure out like how we work together. You must have spoke to thousands of them at the time. Quite a few. And we never had anything. We were constantly focused on getting those big retainers from big clients. And did we miss a lot of great businesses? I guarantee if you went through your inbox of people that inquired, there's some businesses now which are turning over a lot of money. I'll see if you've still got them. Yeah. My old social. But our focus was getting that retainer. Yeah. Always was about getting that kind of strategic retainer to be able to help them grow. And but we had minimum spends.
Yeah.
So probably 95% of our inquiries were smaller businesses.
I'd say it's probably about 70 75.
Yeah.
We got a lot.
This guy knows his numbers.
Yeah. I'd say 5% the big, obviously Nike, Adidas, Amazon, New Balance, and then probably 20% were that sort of mid-tier, All Saints level and companies like that. But we did get quite a few good small startups, but just didn't have the minimums to work with us.
And that's what you get when you get a big agency structure and you've got account managers and you've got layers, you've got overheads, you've got rent. We had to have that in place because we believe we've delivered a lot of value, but we had a cost base as well. So that was one of the things that thinking about that is like we had some great businesses that came in that we tried to work with in a different structure, which we thought was fantastic, but we couldn't really get a model with. And because kind of then that was kind of from the marketing position. From the investment side, personally, I was writing checks with people after I left Social Chain, and I was never speaking to them ever again, or they were calling me every single week. And they're like, I want you to help me with this. I'm like, I'm not coming on as a non-exec. I don't want to do that. I don't want to sit on loads of boards. That's not an exciting bit for me. So I was like, okay, look at these problems I understand with marketing. I understand that agencies can't necessarily engage with smaller businesses because they're quite big and clunky. You've got this layer of account management where you're servicing clients, which is required, but also sometimes you want people to talking to the people that are actually doing. You've got small businesses which are scaling quickly, which need all the support but don't have the money to be able to pay for it. They want to be able to tap into different services as quick as possible to test things. We're seeing a lot of people who are just single channel specialists, be it Amazon, be it Instagram, be it Pinterest, be it even TikTok now, but don't understand wider channel strategies. So I was like, okay, there's something here where I can shape my involvement in businesses where I'm not exactly always just investing and getting heavily involved or investing and never seeing them again. There's disruption ready in the agency space where these great exciting businesses are either trying to in-house things or want to work with the right agencies, but they're too expensive. So let's build something where we have that alignment with the entrepreneurs where we invest because they need cash for things, be it stock, be it working capital, all these kind of stuff. But let's give them the access to a full suite of marketing services to be able to help them in the growth. And that was kind of the thesis of the idea. But then we started to talk to entrepreneurs and we realized they had more problems. And these problems were more similar in the D2C space. So everyone had issues with logistics. There was always a headache people had. They couldn't sell into Europe anymore because of Brexit, so they'd cut off that market essentially, where some people were doing 20%, they're now doing 0%. Recruitment and talent was a massive issue. People couldn't recruit or find people. Finances, people weren't. It took us a couple of weeks to get people's management accounts. If they knew the money was going up in the bank account, they weren't too fussed. And we kind of thought, okay, can we build something which we kind of see as an investment platform, invest into these businesses to help them and support them on their growth. And we knew that people wanted to take investment from people who've been there and done it before. So we thought if we're entrepreneurs, we come together, we get more entrepreneurs to invest in us, to be able to invest money into companies. Then we've got this kind of structure where entrepreneurs are helping entrepreneurs, but we've actually got the ability to help them on big things like strategy as well, maybe acquisitions, and all the other kind of things I talked about. So that was kind of what the idea grew to. That's kind of what we see today with First Adventures is we believe that a lot of these entrepreneurs and businesses, especially in D2C space, because you tend to be generating cash, and we're only looking at profitable businesses at the moment who've got market fit, who don't necessarily need just investment, but they need the support around it. Cash in a lot of the conversations we're having is secondary. So it sounds weird, but with the amount of VCs and capital around in the market right now, money is very easy to get a hold of. For anyone who's got a Shopify store, they can access Shopify credit. They can look at places like Uncapped and ClearedCo, which have all got resources and tools to access funds. Support is limited, and strategic advice is a commodity where people will pay for have that people around the boardroom. So that was that kind of thesis. So that's why we started it. It's born off frustrations of agencies, born off frustrations of investments, and born off of personal experience of me being the entrepreneur driving himself to alcohol and addiction to cope with the stress, when really there was someone else who had the answers who could help me. And that's for me is like looking at entrepreneurs. I can see a lot of entrepreneurs now who are fatigued, who are tired, who are worn down, and sometimes you can say one thing to them and it changes their day. And you can put one person in place, a financial person, to help them do their numbers, someone to help them manage cash flow, or someone to help them figure out their logistics problem, and it changes their life.
Relieves the stress.
Exactly.
And when you are looking at investments, obviously the company is a big part of it, but the person behind the company as well, how big an impact does that play on your decision to invest?
So I think coming from a story myself where people bet on us, rather than actually bet on the business, I think that's a big part of it. We were very, very early and people backed us as individuals. So who am I to sit here and say the individual's not the most important thing when that's the story we had. When we first started the business, we were doing thunderclaps on Twitter. That didn't exist 5 years later. We had to figure out something new. So you're betting on a person to figure out that the market's going to change always, going to always evolve. iOS updates are going to come and are going to ruin things for people. You're betting on the entrepreneur to be able to adapt in those situations, or to bring the right people in around them who can adapt. So that the entrepreneur's a massive part of it.
Big part. And what is the perfect company coming to your business? What are you looking for? Direct to consumer business. What is the ideal profile?
Look, the majority of the people that have come in have probably got 4 out of 5 of the problems that we think we could help with. Does the ideal business have all 5, or do they have 2? What it looks like? I think it's very difficult to say what the ideal company looks like, but I think what we're really wanting is, from our perspective, ones that we can add value to. It feels like if we can really help them and support them, then that's where we're going to win. Be it opens certain doors or be able to bring people in. There's probably some fantastic businesses which we'll see and we could write a check for, and they could go on to be massive. But I think the thesis here is that we do want to have that kind of level of support, and we do want to be able to help them to a point where they don't need us. For me, what success looks like is being able to take an entrepreneur who's maybe got a team of 2-3 people at the moment, put our team into it, grow them to a team of 10-15 people, none of our team be involved anymore, and them to be standing on their own 2 feet looking at an exit strategy. That for me is the great story. If we find someone later on and we put some cash in and just help them a little bit, it'd be great commercially, but it's not necessarily always the right business. So I think that for me is being able to prove that the support is valuable, and more valuable than the cash is probably the right business. So I think that's probably the right business. And obviously there's some things in the D2C space which are nice in terms of having low return rates, lightweight shipping, freight costs are getting through the roof at the moment. So how can we assure that we're not investing in something which is flying tons and tons of freights over from China every single month and costing thousands of pounds, and we can get everything into one shipping container. Lightweight products are quite nice. There's some things that we look for, but in terms of it's probably ones where we can really prove the thesis.
Brilliant. So, and the final question we've got really is around a business at that crossroads, like you have been at Social Chain, where they are weighing up whether they should take on investment. What one piece of advice would you give them?
So it's a big decision. I've been in that situation before. I always come back to myself sat in that room like, what do I want? And at that time when we were traveling around the world and we were doing all that kind of stuff, I was a little bit tired and I wanted some structure, and I wanted the kind of living out of suitcase was nice for a bit, but I wanted the kind of get going angle, and that having that responsibility of taking money from someone, I always see that as a massive commitment. So we got asked from people here, from investors, why are you taking investment? Because you guys could do this, you could fund it in a number of ways, you could get debt on and all these kind of things. I said, because I actually then feel personal responsibility. I feel an alignment with another entrepreneur, and as an entrepreneur to deliver returns. So I actually feel a commitment. So actually, for me as a person, if I was just running this for fun, not taking for external investment, it probably wouldn't be what it was, because you have that responsibility then, and other people around you to be like, okay, let's make this work, what we do and what the plans are. So I'd say, firstly, do you want that? Do you want a lifestyle business where you have full control, or do you want someone coming in who is, investing in you to be able to ultimately grow? So that's the first decision to ask. If you're at a crossroads and you don't want that, unfortunately, you're probably going to have a lifestyle business. Nothing wrong with that at all. Some very successful people have lifestyle businesses that they own 100% of, and it keeps them going. But is it quite attractive to an acquirer? Probably not. So if you want to take that journey, that's the first kind of decision you've got to make if you actually want it.
Yeah.
And if you want it and you want to go on that journey, or as we call it here, if you want to go on that adventure, you see, you got it now. You've got to be in yourself a little bit fearless.
Yeah.
Because it's not. Hey, you see, it's all clicking now, and it's all clicking. He's got it now.
And it's that pressure, isn't it? So
yeah.
If you can cope under the pressure, and you know you can deliver, then it could be the next step.
Yeah, and then the practical steps are probably completely different to those. That's an emotional decision, a personal strategic decision. You know, do you want to put yourself through that responsibility?
Mm-hmm.
And then practical steps is like, look, you know, if you understand your numbers and understand where the business is going, and you've got a plan for where you want to get to, there's a lot of people out there who are funding things at the moment. Yeah. You know, there's a lot of routes of capital. You know, family offices, trade, investment firms, high net worths. There's tons of people that are looking for ideas. For me, it clicked when I started to understand more about the corporate finance and investment world, where it's actually people's jobs to give you money. Like, there's people out there whose full-time job it is to find companies that are doing well and to give them money. I was like, oh, so it's actually someone like, you think it's like this closed door of like who you know or blah, blah, but like there's literally people in companies whose responsibility is to find good businesses and give them money. Yeah. You're like, okay, I've got a good business then, and people want to give me money. It's like that kind of understanding the world a little bit was like a really big eye opener for me. And I'm thankful I discovered that at like 21, 22 years old, because now it's like, you understand the world, so it's quite easy. You know, it's like playing a FIFA game second and you got the cheats on. Yeah. You know, second time round, it's like, oh, you know, you got super speed and stuff like that. Yeah. Shot power 99 every single time. So, nice. You know, understanding that world has been really useful. So I would look at it from, you know, say if you're in a tech business or an e-commerce business, understand who's similar to you, who's raising money from where, which other founders have previously been in that space, because a lot of founders now are starting to be much more active from an angel investment point of view. Get your deck in order, get a pit, you know, people are busy. So if you can summarize what you're doing really well in 5 slides and explore the opportunity, then put it together. And you know, most of these things, again, as we spoke about, the entrepreneur's most important part, be personable, find a way to get across your personality. They ultimately are investing in you, because they'll never know the business, you know, even if it's from like even if you spend a whole day workshopping, get all the due diligence over as much as possible, you still know the business. So they're going to end up investing in you rather than the business. So come across in the best way possible, make good relationships with people, inspire them in terms of what the long-term vision looks like, and make sure that, you know, ultimately you're trustable, you know, trustworthy, trustable, trustworthy, nice. As an individual, because, you know, you're taking, in some instances, you know, sometimes it's their money, sometimes it's a fund, or so you're taking their money and they're expecting you to be able to deliver on it, you know, but ultimately not fuck up, basically. So you need to have a kind of, you know, is this person backable? Yes. Is the business backable? Yes. That's the kind of process first. So it's the person first. If the person's not backable, then you don't really go into business. Yeah, amazing. Brilliant. Well, absolutely brilliant story, awesome insights and some great takeaways there, Dom. Thank you very much for joining us today. Really appreciate that. Cheers. Thanks, Aria. Thank you.